This is Eric with Mother.com. Consider this video to be a part 2 of the September 5th video. So this is about more than 2 months after I recorded this video. So this is going to be part 2, and this is based on short-term educational setup or something we can use in terms of understanding how market responds. So let's take a look at the current chart more than 2 months later. So make sure you watch part 1. And again, it's going to be in the description of this video. So in part 1, and I hope you've watched part 1 so this can make sense to you. Part 1 is going to be in the description of the video, as I stated. So I was drawing this line at the time, somewhere there. Let me draw it like that. And we were anticipating if the market goes below the blue line, that would give us a reason for a swing trade to the downside, again only for scalping purposes, day trading purposes, short-term trading situations. So that would have been a move to the downside if that happened. But now, with the benefit of hindsight, take a look at what happened, and that's why I asked the question, does the market know that these lines are there for the taking? Notice we go below the line and back above it with uniform action for the lows right there. And the market does move higher. In fact, we get a swing trade on a small time frame to the upside. Now, in other words, this blue line, so let me draw the blue line. Let's take this to be the blue line, and I mean this line here. And what we see the market doing is, in a way, it's aware of the line. It plays around with it, goes below it, and above it. In going above it, which is this period right here, you see a swing to the upside. Now notice what happens when we come back and break below the line right here, which is this area. And by the way, there is also another line corresponding with that general area, which is this line here, the RSI lows line. And again, we have movement below the blue line and movement below the magenta line, and we can see that prices did drift to the downside for this swing trade. So in a way, what we are learning from part 1 and part 2 is that the market did not necessarily immediately respond by dropping below the blue line. It actually used it for a rebound higher. Ultimately, we come back, test the same line, and in testing it, we break below it. And it is this break that actually gave us a meaningful drop. And the break I'm talking about is the break right there below the two lines, the red and the magenta, which is that area. In our example, it is this line here. So again, we ask the question, is the market aware of these levels, or is the market just capturing the manipulation that takes place in the market? I'll let you decide, but you can see how you can use these lines to understand where the market forces are moving. Above critical lines, things are bullish. Below critical lines, expect market to show pullback behavior. Eric with Mother.com. As always, good luck, peace, and blessings. E-A-C-S. Yes. Woo. Yeah.